So the industrial sector for commercial real estate continues to be very strong, especially in logistics. So as an example, Prologix is a REIT that has over 690 million square feet of industrial and supply chain commercial real estate, and they collected 94% of their April rents. So that's just a good example of the strong part of this sector. So the pandemic is accelerating an already growing trend of online ordering, online grocery shopping, and multi-channel retail. And this puts a strain on the global supply chain. So an interesting story there, the US grocery industry had a 100% increase in their online grocery sales just between March 13th and 15th when the physical distancing started. So if you think about that industry, 95% of the food produced here in the US or imported goes through a third-party distribution. And that equates to a really strong growing demand for cold storage and cold chain logistics. So that demand is estimated to be between 75 to 100 million square feet across the country. So we're looking at a lot of growth in the industrial sector. And another part of the good news is all of this renewed emphasis on the supply chain and logistics is a need for more space near consumers and near businesses, which means multi-facility, multi-location strategies to serve regional demand for this manufacturing and logistics. So that's not only high cube warehouse, which has already been on the rise, but also flex industrial space. So if you look at just Polk County, the flex space investment has increased 46%. If you look at 2020 year to date and compare that the same to 2019. And the price per square foot has increased almost 40%. So even though many of the users of that space might be in shutdown right now or having employee and labor issues, I can share that Shatterglass development team just wrapped up a 5-year lease at a flex space out in Grimes at Gateway Business Park. So there continues to be demand for industrial and flex available space. So that's good news. And then moving on to capital markets, so a couple of comments there. One is that we're definitely seeing a slowdown in the capital markets. Deals that were already in motion are continuing to close and transact, but those that were still in due diligence, many of those are asking for a 60 to 90 day extension on those projects. And the issue is not knowing that net operating income. So as different tenants are asking for rent relief and your NOI is in question, then the value of the property is a bit in question, hard to put a pin on. So there's a lot of opportunistic investing coming in 2020. So for properties maybe that are at the end of their financing term, or maybe they don't have strong cash reserves, and the owners might be forced in the end to sell at a discounted rate. So right now there's about $300 million in the private equity market that's really watching the market and very interested in investing now on these opportunistic opportunities. And this is kind of fueling a trend that already had started, that many funds and groups, both public and private, are starting to increase the percentage of commercial real estate across their portfolio. So I'd like to take a moment to, I'm excited to announce that Shatterglass Development is, because of this trend, is launching a new branch that will focus on connecting developers that need equity to accredited private investors looking for investment opportunity. So I can connect with the team later, but if anybody wants to visit shatterglassequity.com to learn more, the goal is to bring more private equity dollars to our local markets, to our state, and capture some of these funds in this trend.